Welcome back, everybody. I believe that everything should be in check now. Just give it 1 second. Perfect, 1080p is available, so that's perfect. If you guys could just be as kind as just to give us a notification in the chat. Chat should be enabled, it's open. If the audio is good. And then we can just give it a couple of seconds so some people can roll in. And then we will begin. There we go. Just got the stream on setup. Everything looks good on this side. Just roll it a few minutes and see if we can get some people coming in before we begin. Just give it a couple more seconds before we begin. Okay. Everything looks good. Seems to be fine. Seems to be set up. If you guys could just comment in the chat so I can know that the audio is good on this side, then we can begin. Okay, here we go. Let's dive in. You guys are just gonna have to ignore this ad that pops up right there because we don't have the premium, so you will just have to excuse that. Okay, let's begin. All right. So the first thing I want to talk about is the backtesting and journaling aspect of trading. So first of all, I'm going to show you how to take your data and capture your data in Notion, and how we can set up Notion so that you can capture your backtesting data and journal all of that, so you can keep note of your examples as you practice, of course. So let's go ahead and open up the example I've got over here. So looking at this example over here, this was just a crude depiction of a trade over here, which I marked up. So up here in the left corner, you can see that I've got AM or PM session. We obviously have the stops attack, market structure shift, aggressive price run, price in a discount or premium, and then we have the fair value gap in the 50% of the discount or premium range. And if you've been watching or following along the channel for quite some time, then you will be well aware that these are usually the checks that we follow when I'm explaining examples of entry. Then I usually follow these ticks or checks. And then if you look down here at the right hand side of the screen at the bottom over here, then I've got a depiction over here of what I usually do is I just jot down what the stop was if the trade saw any drawdown, and then I usually write down how much time it took for price to get back to the entry once it's formed the entry. Okay, so I got that noted down, and then I have usually what would be a first take profit or a partial point, what that would be, and then how long it took from the entry point for me to get that target. And then we have second partials, and of course we have terminus or a third partial, and how long it took to reach those points. If I just bring this up a little bit so we can see it a bit better, then in this example over here, this was a higher time frame fair value gap noted, extended through time, and it became an inversion level. Noted down here, we have these equal lows, stops resting below these, and price took them out. We have market structure shift, and over here I've got a volume imbalance order block noted. We can see that price came back to those, and in this example, price broke through the market structure shift, which is marked or checked by the little check mark, and price did so aggressively. We can see that there, and price then came back down, and we have this order block right here, which is resting at 50%, which that could be utilized as an entry, and which also taps into this inversion level right there. So that would have been the entry point for this particular trade example right there. And then as you can see right over here, all high, which is 7 handles, which would be also from a higher time frame. That would be where I would collapse the whole position, usually around 5 handles or so. You take a bit of a partial. As you can see in this one, I've got it noted in points. It's 320 points. That's via MetaTrader 4. So that would be about 3.2 handles, 5 handles, and 7.2 handles. So if you want to take this and you want to transpose this to a Notion, then I'm going to go ahead and show you how to set up Notion, and how you can bring this template into Notion. Before we get into that, let's go ahead and look at or talk about screenshots. You can obviously use Windows as a built-in screenshot tool. It's called Snip or something like that, and you can just use that one, and you can just go ahead, and once you've taken the screenshot, you can just drop it into Paint, and you can add your text. Note that AM or PM session, which that could also be changed over to London or New York session, or it could be changed to, if you're trading one of the macro times, then you could be looking at, as per example, 950 to 1010, which is one of the first macros, or you could be using the silver bullet, or you could be trading the PM session. Whichever one you want to trade, that's the one that you're going to put up there. Because obviously now you're collecting data, and you want to know how many times it's beneficial for you to find that trading setup in that specific period of time, or perhaps you're collecting various times, like you're collecting the silver bullet, and perhaps you're doing the last hour tradings in the PM session, and then you will be looking at all these data points. So it's important to take note of them and jot them down. Okay, let's jump into Notion. Let me bring that up over here. Let's put it aside. Okay, here we go, Notion. So first things first, you're going to go to your left-hand side and you're going to add a new page. Then you're going to be left with this page over here. So what I found what works best for me and what I personally journal with as well is when you open this up, you just give it a title. Let's just say backtesting data, right? Okay, perfect. Then we could open up a table like this, and then we select a data source. Hold on one second. Let's see how I can get this open up here. Let's just say a new database. Okay, perfect. There you go. You're going to want to have it set up like this. And then, okay, first things first, you have to make a template now. In order to make your template, you're going to go click on this, new template. It's going to open up another new page, which you can leave that blank, because what I usually do is I like to type in what pair I traded and then what day the execution took place. So I usually have some tags. Let's add a property over here. I like having the date. And let's say here we go. Created time. Yeah, that's perfect. There we go. If you want to delete something, you just right click on that, or you just click on this little menu right there. You just go delete property, delete, gets rid of it. Delete, get rid of that. Tags, let's go ahead and let's remove this. So I like having it like this because I can just say, for example, I'll show you how I use this. Then you're left with this blank page. So in this example, I'm going to show you how we can add these checks, how we can add them as a property. So we add property. We will say select. It will be AM or PM session. And then as a drop down, the options will be yes or no. And you can go ahead and click on that, and you can decide on the color, and you can do all these things. So that's the first one. Maybe just click right there and you can see it's now listed. Note that you can move them around. Let's add another one. It's another select. Let's say the stops attacked. And again, yes or no. And you just click away, and this one is already in the correct order. Let's do the rest of them. Okay, there we go. In this one, we have to move them around. Aggressive price run. In essence, this is basically the displacement that you see. Usually when you get the market structure shift, you are looking for that displacement move. ICT would usually refer to it as the elephant stepped into the room. It's unmissable. There we go, price in a discount or a premium. There we go. So we have the fair value gap, and then it's going to be at the bottom. So it's as simple as this, and I've got a basic template over here that's now set up. So once you are happy with this template and you are finished with it, you just click aside, and as you can see that it just stays right there. Let me just see if it's the correct one. Okay, let's see which one is this. Okay, you want to go ahead and set this one as the default. It's for all the views. Click aside. Okay, seems like I have a few things in this table which I don't really want, so I'm gonna go ahead and just delete these. So what you will do is you will simply click on the new button. It'll open the page up. You can obviously open the page up in full if you want to do so. If you want to go back, you just click on the little back button. So let's go ahead and now say, let's go ahead and find an example live that I want to journal now. Let's go back to trading view. Okay, perfect. Let's quickly find an example over here. Okay, let's go back to yesterday's data because we are not in session yet. It's quite early in the morning. So let's just bring this boy back and go find an example over here. 12 o'clock. Okay, there we go. Here we go. Okay, I'm just going to use in this example the silver bullet as an example, which is from 10 to 11. $10, there we go, perfect. Up to 11 o'clock. Take note that the silver bullet does start at the 950 macro, 950, 1010. That's your first macro zone, and it kicks off the silver bullet. Okay. So looking at this, I can see that stops have been taken here. So take note of this. There's the stops, they've been taken. Market structure shift. In this example, and I had a question on the channel where somebody asked, and he specifically said that he wanted to see entry examples using the same model, but how you can get different variations to that specific model. Now, you're not going to get the same textbook entry every time. It's not going to present the same. There will be some variations to that entry, but it's still going to be very familiar to you. In this example, usually when you look at the 2022 model, you would expect a market structure shift below these lows, correct? But in this specific example, because we had the stops resting above these equal highs, I would take my market structure shift and I would look at this specific point, these equal lows, as the market structure shift. And you can clearly see we had a very, very strong market structure shift in this example. And this would obviously be the displacement leg as well. And then you would pull the fib on this swing, high to low. And then you would get discount or premium. Premium is obviously above the 50%. So in this example, my eye jumps to this fair value gap over here. I would use this one. We also have these fair value gaps in here, but price did not trade to them. Once price trades to this one, this might be all that is necessary if price is very bearish. In this example, we can see that price was very bearish and it only traded this fair value gap, and then it rejected and moved down lower. So anything above 50% would be a premium if you are looking to short, and anything below 50% if you are looking to long would obviously be a discount, which would be ideal to your checklist for you to take a position. Okay. In this example, we also have these down candles, which would act as a breaker block if price traded back to them, which in this example we also did not trade back into the breaker, as you can see. So that's just how you look for extra confluence, and you look to see if price was to trade breaker blocks. What if you got to work with over here? This would also be a mitigation block right down there if I take this low and I pull that through, but that was not traded over here. So in this example, we have the fair value gap, and that would be an entry point. Now, if we take entry point that, it would be a short position. Entry would be after the rejection, which in this case, it would be after this candle once we had the reaction. Right about, let's say right about there at the close. Stop. Okay, in this example, the stop loss would have to be above these fair value gaps. So I would opt for a stop right about here. This is also an order block. up there, so you wouldn't really want to see anything above the mean threshold of that, and then the trade would obviously be invalidated at that point, because we have a fair value gap, we have another fair value gap, we have a volume imbalance over here, and we have another fair value gap over here, which if price closes above this one, we would have lost 3 PD arrays, as ICT says, and then this trade would be invalidated. So that would be the stop if you want to play safe, which is a 10 handle stop. And obviously first partial would be down here, which is 10 handle, so that's a 1-to-1. That's not a bad trade if all of your tick boxes have been ticked and you have followed the rules. Then there is nothing wrong with a 1-to-1 trade idea. Let's just take this thing. There we go. Let's just get that minimized. Let's just go ahead and look at the higher time frame and look for targets. 4th of May. Let's just go into 10 o'clock. Okay, let's look at the higher time frame and see what we would have had supporting this idea at the time of looking at this piece of price action. Let's go up to the 15-minute at least. Let's go ahead and look at this. Let's bring it up a little bit. Okay, so looking at this example, I can see an equal high right over here. I can see the order block right there, which we can take note of this. Let's take note of the order block. Mark it out. And 15-minute order block. That would be confluence for us to trade lower. And we would look at narrative, which would be, if we just zoom this out a little bit, then we can see we have this low over here. We have this low, of course, over there, and we have these equal lows. That would be a target there. But in our example, that would be not a very good setup if we look at these equal lows. So let's go up even higher to see if we can find ideas to support this trade idea, and why we would want to be bearish in this specific scenario. Right off the bat, I can see we have these equal lows. Let's go ahead and mark them out. Let's take note of them. Okay, go in there. This will be a equal low from the 1 hour. And then we would have an old low over here. And that would be the target. Let's go ahead and mark that and just say sell side 1 hour. Now, if I look at this example in price, to me, this is a market maker sell model. We can see we had the consolidation over here. We then had the low risk buy And then we had the smart money reversal, the low risk sell, reaccumulation, and ultimately price will seek this liquidity below here. Now, when I journal, what I do is I usually go into the higher time frames as I would be looking at price when price is live, and I would mark this chart. Just ignore this daily level over here. Let's just get this off. This is not applicable to our example. I would take a screenshot over here. So I've got this data. Okay, there's the screenshot. I'm just going to copy this, go into Notion, and then paste this. It's going to upload the image. And then if you double click, it will open the image, and you can then zoom in or out of the image so that I know, okay, I'm looking at this lower time frame idea, but this gives me the draw on liquidity, the bias in a sense that I want to see price target these lows. So that's the why. Why did I consider looking at selling this specific day? Then we can go down to a 15-minute time frame. We will take a screenshot of this. Let's just move that over there. Extend these levels. Perfect. So then we can just look at the screwed depiction of price. Obviously, if you do zoom it out, you will see that we have, in essence, the same price fractal. We just look for higher time frame confluence in the sense that we look for price to trade into a higher time frame point of interest, a PD array. In other words, an order block or fair value gap or a breaker block. We need to have some kind of a higher time frame level traded into, and then we of course need to take the liquidity. So let's go ahead and take a screenshot of this. There we go. Copy this image. Open up Notion. And let's paste this image. There we go. Open it up, and there we can see we were looking at this order block. We had the stops right there. This was the market structure shift. Perfect. Dropping down, we can see that we also had the same order block levels on the 5-minute. And we also had a volume imbalance and a fair value gap over here. So we will note this. We will take note of these levels because this supports our idea. And we can see that price respected this fair value gap very nicely. Price never traded through the 50% of this fair value gap. If I just take the fib and I just pull the fib, and let's just zoom this in. There we go. We can see price never closed above the 50%. Price traded below the turn it around. So we're on the same page. 25%. Okay, price closed below the 25%. That means we are very bearish. And then we have the order block over here. Let's get the FIP out of the way because that's a lot of noise. And then this will be another screenshot. So you take this screenshot, copy that, and that puppy is going to go into Notion. There we go. It's noted. Now we can also see, if we were looking at this piece of price action live, we would also have this fair value gap from this candle's low to this candle's high. So this will be a 5-minute fair value gap. And then we would have this one above here as well. So we take note of this as well. Perfect. Those can be screenshotted as well, but for the example, I'm just going to continue. 3 minutes. Let's just go in. Yeah, jump back to the example. So looking at a 3-minute chart, we can see that we have the order block. Prices hitting that very, very, very nicely. We have that fair value gap, which is that 5-minute fair value gap. Was it the 5-minute? Let's just go back and see. I just want to be sure. Was it the 5-minute one we had over here? Yes, it was. Let's go ahead and mark this. Okay, so looking at the 3-minute, we can see we have those equal highs. Oops. And we have higher time frame confluence in the sense of this order block, the stops, and we can see a nice rejection off of these levels. Boom, boom, boom. Price moves away. And we also now have these lower time frame order blocks over here. This order block, price it moves away. So there we go. Sell side on the 1 hour. So we can go ahead and we can see now that we have one very big fair value gap over here on the 3-minute, but since the 5-minute is the higher time frame, always remember that the higher time frame is the time frame that dominates your lower time frames. So keep that in mind. So I will stick with the 5-minute fair value gaps. So let's go ahead and take a screenshot of this. Let's copy this Notion. And again, we will paste this example. And there it goes. Now, depending on which time frame you execute, which could be a 5-minute, 3-minute, or a 1-minute, that will be dependent on the day, how price presents the trading setup to you, and it will also depend on, of course, if you only want to execute on the 1-minute time frame then, or if not. Sometimes this setup will present itself on the 3-minute time frame, then you will use the 3 minutes as your execution. In this example, we will use the 1 minute. There we go. Let's extend these levels. Perfect. So this is what makes this trade a higher probability, is the fact that we have the 1 hour with the sell model. For reference, here's the sell model. And then we had the 15-minute order block and the stops that were taken over there. That gives us the confidence that we need in order to know that the draw on liquidity is below us in the form of equal lows on the hourly chart, as well as sell side on the hourly chart, as price will seek to fill this market maker sell model. So for any trade idea or trade setup to be a high probability setup or idea, you will look at bias in the form of draw on liquidity. So you want to know, where's price going to go? Is price going to go up? Is price going to go down? Is it obvious? Is it not obvious? If it's not obvious, then you probably should not be trading. Then the odds are probably that it will be low probability. So that's the first thing. You need to form a higher time frame bias. It could be a daily bias, it could be a weekly bias, it could be a 4-hour or a 1-hour bias, depending on what you see and how you trade. But it has to be a higher time frame bias. Then from this bias, we will then look at a 15-minute or a 1-hour time frame, and we will then look to form a narrative, meaning, what do I expect in price? What do I expect to happen? So we have these equal lows. So we see price trade into the higher time frame levels, and we then expect price to come and grab these liquidity points and take them out. And price then gives us a big displacement down. This confirms our idea. This confirms our narrative. And then we know that we will be bearish. We will look for shorts. So then we look at our model and we start looking for the things. We start looking at the checklist and see, okay, we've got stops. We had the higher time frame points of interest, which was a order block that price traded into. We had the 5-minute fair value gap, and price respected that. Price gave us a market structure shift. We had displacement down. This swing, price has to be in a premium if we want to sell it off. So that would be your basics that you look at before you can take any trade. You have to wait for price to come back into a premium if you want to sell off. So then you can look at these higher time frame fair value gaps, which this one was also outlined on the higher time frame. And then price trades into your levels. You have to incorporate these fair value gaps up here, and you can place your stop. Now with the higher time frame in mind, we can move the stop below that fair value gap, because anything above this fair value gap, honestly, You don't want to be in this trade anymore, because if it did not reject this fair value gap, that idea will become invalid. If you want to be safe, you can leave the stop in the mean threshold of this order block right over here, which is these consecutive up candles. If price closes above this fair value gap and does not reject, then at that point I would already have taken something of the position off to reduce the risk, so I don't lose the full percentage of what I trade with. And you can also, what I do is we mark these fair value gaps. Hold on, let me just zoom in. Let's bring this up so we can see. You can mark these, and we can see there's a 50%. Price came up to the 25% and it rejected it. This gives me confirmation, and this tells me that, okay, price is very bearish because we did not close above the midway of this fair value gap. We closed on the lower quadrant, the 25%. It rejected it, it closed down here, and you could take an entry as price is rallying away like this. You could take an entry in this here. And this is exactly how you would measure this fair value gap above here. If price comes up, let's say if price was trading up and price was coming up and it was trading through, and the candle's body closes above the 75%, then at this point it's likely for price to continue going up higher and then taking out this high above us. So that's how you know that then, okay, then it's not likely for my trade to continue down anymore. It's probably gonna want to continue rallying up. So there's that example. And if you did take this one, then now you can have the targets. Down there, and obviously the first partial would be there, so let's mark this at these equal lows, and that would just be equal lows, which would be a partial point. That would be about, from the entry it would be 10 handles, so that would be a partial. If you are trading for 5 handles, then below this would be a partial right there. That would be a partial at 5.8 handles, and then 10 handles, and then ultimately it would be 16 handles at this point here if you were holding this, reaching for the sell side liquidity. But you would have to be very patient for this target to get hit. As you can see there, it did get hit, but you had to be very patient. So you would take this example, and again, screenshot this example. So you'd screenshot this example, copy the example, you open up Notion. Now this is where the important part comes in. Before I paste this example, now I'm going to do the checklist. Let's just make that a little bit smaller. AM or PM session, we were in, okay, hold on, let me make a correction over here. Edit the property. Okay, this one we will not be yes or no, it will be AM PM, and the third option will be, Hold on, let me just go back, make the correction. If you're making correction to the template, you have to go in here. You gotta go up here. You gotta go edit. And let's just see AM PM session, edit property. There we go. And you can just put in here, not in session. Those are the selections. Go ahead and open this up. So first one, AM or PM session. We will select the AM session, as this was an AM session trade. We had the stops, so that will be yes. Market structure shift, yes. We had a big market structure shift right there. And then we had a very aggressive price run over here as well. Price in a discount or premium, yes. Price was in a premium. And the fair value gap was in a discount or a premium, yes, it was in a premium. So that's the checklist. Then we can put the example in here. And we can open it up. And there is the example. Perfect. So now I can go back and I can see, okay, this was the trade idea. This is the reason behind the trade idea. And it makes it clear why you wanted to sell on this specific day. Usually what I also like to do is I like to include the calendar of this specific day. Let me quickly go find the calendar. This is the calendar, and we can see we had some news events at 8:30. We had unemployment claims. Nothing else that was going to influence our trading idea. So what I do is I usually also take a screenshot of this. Copy. Let's go back to Trading View, Notion, and usually I would just put this in here as well, because this just tells me, okay, this was what was going on this day, so that I know, okay, I was not trading on NFP day, which you should not be, or perhaps you had CPI, maybe you had FOMC, which in this week, you know, we have NFP and on Friday, and we also had some FOMC news as well. So coming back to when I started the live stream and we were looking at this title, what I would do in my example, I usually just write down the pair, which was, this was US 500, and when it was created, if I created this on the day, on the same day as we saw the example, which the example was the 4th of May, which now is the 5th. So this is a day late. So usually I copy this, I paste there, and then I will change the date back to the 4th, so that I know, okay, this example was on the 4th of May 2023. The time doesn't matter, but just it's the date. And then that example is finished. Now you can see on this example, let me bring this up, that you can see what's nice about the calendar, the table view, is that you get all this data, which you can rearrange this, you can click on it, you can move it around, AM or PM session, aggressive price run, you have the market structure shift, aggressive price run, price. fair value gap, yeah, that one's last, stops attacked, and you go down at the bottom and you can change it up. So this is what's nice if you're collecting, again, like I said, if you're gathering data and you're looking at these checks. Was this example in AM or PM session? Was the stops taken? Did you get the aggressive price run? These are all things that you look at when you're collecting data. What specific time did this example take place? For instance, if I want to collect, instead of it being AM or PM session, you could change this and you could change it. You could put times in and you can say, for instance, 10 to 11, 10 to 11. Then now what happens, I can change this and I can say 10 to 11 and it will change it over here. So this is why this is very nice, because you can change things and see if, for instance, let's say you're looking at trading maybe from 10 o'clock to 11 o'clock, or maybe you're looking at macros and you're looking at 9:50 to 10:10 and you're looking at 10:50 to 11:10 and you for instance, you can't decide, okay, where is my setup gonna form? Then you can collect the data and you can look at what the data tells you when it's more high probability for your setup to form. So that's why you collect that data. And then you can eventually narrow it down and you can say, okay, my setup forms 80% of the time, my setup forms on the 9:50 to 10:10. And then you know, okay, that's going to be my trading period or my working times, like ICT has said. So I want to take a quick moment and just talk about that I mentioned that I want to do a thing where we can let's just say we call it a meetings or a meetings group or whatever it is, or whatever you want to call it, where I just said that I'll be hosting a live meeting, and what I will share in this live meeting is my personal checklist, pre-trade and pre-market checks. So they're two separate things, honestly. The pre-trade checklist is honestly gonna be, looking at the chart, doing your analysis and from the higher time frame, and just taking notes of specific things that price is doing. That's before you even look at taking a trade. You're already noting down specific things and you're ticking specific boxes, and that's going to determine whether it will be low probability or high probability. So I've got that personal checklist. That's one that I sat down and I just I added my approach to coming on the chart and doing analysis and seeing if the conditions are ideal for me before I even consider going into the marketplace. And then we have the pre-market checks, which now what I've done there, it's not just the basic checks anymore. Now, I've kind of changed it up a little bit, and I've added one or two more or three more checks on that, And I've also added, like, for instance, if you are not trading, if for instance the trade idea is counter trend to the higher time frame, then you would be looking at cutting the risk in half, because it's not in line with higher time frame order flow, which would be the daily, the 4-hour. So then, I've added little things like that onto that. And then I have my approach to risk management, which is how I will explain two things in that category. Number one being how you manage a trade when you are in a position, how you would manage the risk, and how, if price was trading against you, then how you would approach that. And I talked a little bit about that in the video. So we kind of have that where you kind of learn a little bit more on my approach to how I would manage a position, how I would look at placing a stop loss, how I would be doing that, and in general how you would look at managing risk, as in terms of if you're looking at what percentage of the account you want to risk. And we also look at that if you did take a loss, then how you approach that and how you adapt your risk management so that you can recoup that loss. So that, let's say for instance, if you in a losing streak, or maybe you just had a losing position, or you just have 1 or 2 losing positions, what are your next steps going to be that you're going to take before you consider taking another position, and how you will look at preserving your capital. And then we're also going to look at how to backtest and journal on Notion. And on that approach, then obviously then you're going to get the full checklist, and then I'm going to show you exactly how I journal. And in this example, we will also look at how to set up the journal exactly like I've got mine set up. So that's just a little bit of what you can expect if you decide that you're interested in subscribing to that. Then that's what you're going to get in the first meeting that we're going to have, in the call. Or I'm not sure yet if we're going to use a Zoom call or what we're going to use. But once I've got enough interest, then we will, as a group, we will decide on what we're going to use to arrange this meeting. So we will backtest. We're going to journal in that one as well, like I've said, and I'm going to show you my specific Notion template, as well as how I've got that set up, and as well as using, that's how we going to apply the pre-market checklist and the pre-trade checklist. We're going to set all that up, and now we're going to physically use that. So that's going to be beneficial to you. And basically that just outlines the rules that you have to follow before you even consider taking any positions. And if the pre-market checks do show that you will have high probability conditions, then you can go down and you can look at the pre-market checks if you do want to trade. And then when your setup presents itself, you then look at those checks and you tick them down and to see if the trade idea follows your rules. If it does not follow the rules, then obviously you don't have any trade. So this is, it's just the base beginning of how you will find and become consistent as a trader. So once you've registered for this call, the Zoom meeting, like I've said, you will be part of the group. I'm going to make a group on Telegram, and it's not going to be a once-off thing. It's going to be a thing where you've registered for the group, so now you're part of this group. So let's say, for instance, every second week we're going to do a live stream, and then it's going to be a different topic. Or perhaps I'm going to show you what my approach is to a different concept of ICT, or I might be talking about a different model. It depends on what we as the group, as the members of the group, it depends on what the people request. If there is any specific requests on the group, then we're going to cover the requests on the live stream. So it's not going to be a once-off thing. It's going to be like a lifetime thing where if you're part of this group, then you've got exclusive access to those videos, those live streams. So it's going to be a bit more in-depth. It's a bit extra than what the usual just subscriber of the channel will get. You're going to have the perks of being able to request specific things, and we're going to cover specific topics. And then we're also going to cover, we're going to do some live streams with tape reading as well. And we're going to, and those will only be to the group, to the meetings group specifically. So we're going to have one of those each month as well. And then again, that's just, you know, the community coming together, and we can, if you've got questions, you can ask the questions, and it's just us as a community coming together. We're just doing a tape reading session, and we're just learning. So that's what I've got planned there. And then, as I've posted on the channel quite a while back, that we will be doing a weekly outlook and review on that week's analysis when the channel gets up to 500 subs. Now that's going to be available to the public. So I'm already doing that. So that's not going to be something that we're going to, you know, that's not going to be a perk. That's already something that's available to the public, to the channel. And we're also going to do live streams on the channel where we tape read, or perhaps instead of doing just a recorded video, I might do a live stream on a specific concept. And we're also going to do that. We'll look at doing that once a month. So for the members, we're going to look at doing at least twice a week. We will look at doing a live stream, coming together, and then if there's any questions or specific topics, then that will beforehand be decided, and then we will decide what we're covering in that specific live stream for that specific session. So if you wanted to subscribe to the calls or meetings group, which I'll still have to get that set up and still have to get that created. It's only going to be 30 USD to get that membership, which, like I've said, that membership is going to be for lifetime. It's not just a once-off thing you pay and now it's just a once-off. You're going to be part of the group, so you're getting more benefits. You're getting more live streams, which I've only just started now doing more live streams. I've did the previous video, then we had, which was the first video, which we had the audio on that, because I've had to get the setup ready to do that. So the channel is still it's still developing and it's still growing, but yes, there are big things coming to the channel, and we're gonna get a big community, and hopefully, yes, I'm recording my journey, and this is just me sharing my experiences for the community. This is my give back, and it's just my way of showing appreciation for what I've studied and what I've learned through ICT, which, like, I've already given my trading journey, which was I've been studying for about 3 years. I've been studying ICT, so it's quite a long while, so I know quite a few things. So that's why I'm here sharing my approaches to some of his concepts. So as for today, that's going to conclude the backtesting and journaling part of this live stream. In terms of Notion, if you're not familiar how to set that up, then you just gonna go search for Notion on Google. It's free to set it up, and you can just download the app and then you can just log in. It's free to get that set up on there. So as for price action currently, let's just go and take a look at this, see what's going on. Let's just see what DXY is doing. Look at higher time frame analysis. So let's just drop a little analysis on here in this video. We've been looking at this for quite a long time, this analysis over here. So what I have noted here, and we're doing this together now anyway. I have this equal high noted, which price took that. We have an order block right there, price traded that, and then we have these equal lows. We also have a fair value gap. We have the fair value gap, and we have a volume imbalance. Let's note the volume imbalance. Let's go ahead and note this volume imbalance. And we also had this liquidity down here. Let's just see over here what I have. Order block. I believe these are quadrants that I had on this specific weekly. There we go. Here we go. I believe, is it weekly? No, it's not the weekly. Just see. I don't think it's 1 hour now. I think it's 4 hour. quadrants. These were quadrants I had over here marked. Let's just get rid of them because they just, oh yeah, wait, hold on, back to it daily. Quadrants. Okay, well, they don't resonate with me anymore, so I'm gonna go ahead and delete them. Let's get them off of here. We can get this off. This buy side is not relevant anymore. And this volume imbalance is no longer relevant. Let's see, price is, let's extend this fib. There we go. We can see price is in a discount relative to this range. Let's take this and let's go ahead and move it down to this range now, because that's the range we're trading in. Get rid of this. Okay, perfect. We had this fair value gap here. Price traded that. We still have this low. We still have this old low. Price did actually tap into it right there. You can see it tapped it right there. It got it. It traded to it right there. So now it would just be a relative equal low now. So that would be a relative equal lows from the daily. There's that. And then I had this fair value gap from way back here. Let's go ahead and zoom that in a little bit so we can see what's going on. And this daily order block, which price is still respecting these levels. It's not yet oops, broken through these levels. So let's extend these levels. They're still valid to me. In my eye, they're still valid. So looking to the left, we have this. There's a fair value gap you're looking at. Is that one? And we have these relative equal lows over here. To me, when I look at this price action, we're still in a range. We're in this range. Let me note the range. We're in this range. So when we're in this range, the probability is low. It's not high probability to me because there's no clear direction in this. We're just taking liquidity, we coming back to the range, we're taking these equal highs, we're coming back in the range. You see we got this equal lows down here now as well. Get rid of this. So what I personally see in this price action now is, since we've taken this equal high, we've left this volume imbalance, we've got this fair value gap now, and we left this equal lows and we got this equal low down here. So what I want to see is, I would like to see price coming into this fair value gap. We also have these down candles, which would be an order block, right? It's a confirmed order block as well. So we're also going to look at the order block. So we can take note of that. So there's that as well. I would like to see price trade into this fair value gap, and then I would like to see price reject, and I would like to see price come to this lows and take out these lows. So since it's NFP week and it's already Thursday, it's already Friday now, so anything past Wednesday New York session is no longer a high probability trading scenario. ICT says if you're still new, then after Wednesday New York session, then you should be out of the marketplace. So that's what I would like to see. I would like to see that go up there and reject lower. Then looking at US 500, hold on, wait. Want to give a quick glance at the weekly. As you can see on the weekly as well, we've got, it's ridiculous. It's just not high probability conditions because you've got these range and then you got these equal lows. You can see we took out this high. So in my opinion, I would, far and large, I would like to see price trade lower. But it will be determined by this fair value gap. So looking at US 500, you can see it's in a range. We're range bound. So let's go ahead and do this analysis. So if DXY is going lower, then we want to see this pair trade higher, give us higher price. I can see these equal highs. Right there. And then we have fair value gap over here. We can see that price traded into this fair value gap. You can see that right there. But now price took this liquidity as well, and also this one. So in my opinion, I would still want to be bullish with this example now, because we're in this fair value gap. So we want to be bullish, looking for bullish price action, higher prices. So that's given me the bias. So then in order for you to take any position, you would need to look at a narrative. And that's how things fall into place. So that's just giving you an analysis of what would be expected for, as you know, as far as where we can trade to. And then I'm looking at this equalize. We're looking at this equalize. So to me, that's already given me the narrative now, because I'm looking at these equalize. That's where the draw on liquidity is. So I want to see price trade up into this and then ultimately take it out. And then we also have this fair value gap, which now you can take this data down and you can go into a 15-minute and lower time frame, and then you can expect price to trade into that as your draw. And then we're looking for order blocks or fair value gap or volume imbalances as liquidity. So that's the higher time frame point of interest. Then you want to look at, when we look at this on a 1 minute or perhaps on a 3 minute, we can see that price took this liquidity. Price took the stops. These ones. So that's how you see price took the liquidity. So that gives you the building blocks. See, price took these lows. That gives you the building blocks of how you start coming to a narrative and an idea, and then how you can start looking for your particular setup to happen. As for now, that's going to conclude this video. Hopefully you've found some insight in this one. Hopefully you've learned something. and I will see you in the next one.